Welcome to the Statler Financial Radio Show with Philip Statler. Have a question for the show or need assistance with your retirement plan? Give Philip a call today. 863-285-3815. 863-285-3815.
The spending plans being proposed by President Biden involve trillions of dollars to pay for infrastructure and other efforts, and he is eyeing higher taxes in the future. Now, we're told the Biden tax increases are expected to target the wealthy. We have some insights today from a financial analyst who says the impact could likely go beyond the pockets of the ultra-wealthy. Taxes are our main topic again today. As we get started, 863-285-3815 is how you can reach Philip Statler to learn about some of the ways to reduce or even eliminate your taxes in the future. We have a great show lined up today. Jen Rizak here alongside Philip Statler. And Philip, always a pleasure to sit down with you. I hope all is well with you this week.
Hey, doing well. You know, we hit spring, which feels like summer here in Florida, and I think we've seen our last little bit of spring weather as we get back into the mid-90s.
That's exactly right. And, you know, talking a little bit more as you talk about the temperature going up, we're talking about the temperature going up with our tax environment here in the U.S. And I have to say, Philip, I don't know if you know this. We talk about all these multi-trillion-dollar government spending packages. And if you're wondering what comes after trillion, I went ahead and looked it up. It's not a gazillion. Trillion is a one with 12 zeros after it, and the next name number is a quadrillion, which is a one with 15 zero, and then a quintillion. So I don't know if we even want to let the government officials out there know what those numbers are called, because they'll be spending them before we know it.
Hopefully we don't even get close to that number, because I mean, we've already we had 5 trillion in the last basically 12 months. And I know that Biden has another almost 4 trillion, if not a little over $4 trillion lined up that he wants paid for.
Yep.
That's going to be almost $10 trillion. That doesn't include the normal deficit we run.
Right. And, you know, big numbers that we're talking about here. For weeks now, we have been sounding the alarm that higher taxes are probably coming. Most people don't realize we're in a low tax rate environment, but taxes are not going to remain, quote unquote, on sale forever. And even at their current tax rates, they can still swipe away at your savings, leaving you with a fraction of the money you were counting on for retirement. Philip, talk a little bit about the potential impact taxes can have on our retirement savings.
You know, they're the silent killer along with inflation that can really eat at your retirement savings, because look, every time you want to take money out of your IRA or your 401k, guess who gets a little bite out of it, or sometimes a big bite out of it? And that's Uncle Sam. And so, you know, the problem is we don't know how big that bite's going to be, because as tax rates go up, that bite's going to go up too. And so it just becomes problematic. I know that a lot of the discussions we have are around some Roth conversions, if it makes sense for people that are still in a low tax bracket, and those people still working. I mean, we're looking more now, Jen, at doing Roths within your 401k. I mean, I personally, you know, my 401k, all my money I put into a Roth, because I know that eventually tax rates are going to become way more than I want to have to pay. And so I'd rather pay the tax now at 22, 24% than I would at 30% down the road.
And here's what we want to get to as well, as we talk a little bit about why we're worried about higher taxes as a possibility. It's government spending is really pushing this. Charles Payne, Philip, is a Wall Street analyst who hosts Making Money with Charles Payne. He's the author of the new book, Unstoppable Prosperity. And when he was asked about the White House plan to spend taxpayer money, including that $2.3 trillion for infrastructure plus another $1.8 trillion in additional spending, Charles Payne says the impact on the economy is twofold.
There's a dual impact. There's an economic impact and a societal impact that I'm actually more afraid of, to be quite honest with you. Of course, part of the plan is to raise taxes. Even the scheme to raise taxes wouldn't be nearly enough to pay for all this additional spending. And of course, let's not forget the 1.9 trillion that did go through. So we're talking over $6 trillion. And most of it did be spent in the near term, these taxes ostensibly to pay for it over 15 years. Again, it won't happen. It never matches up that way.
Right. It never matches up that way. He says policymakers often say that only the ultra wealthy are going to be targeted by these tax increases, but he believes the impact is going to go far deeper than just impacting those millionaires and billionaires.
Another layer of debt, another layer of uncertainty. And we're talking about slowing down the engine of our economy. They sell these things going after Jeff Bezos. They sell them on going after Amazon. But it's the small businesses that they hurt.
That's right. You can find the book at unstoppableprosperity.com. And for the full interview with Charles Payne, you can go to Philip's website, statlerfinancial.com, to hear more from Charles Payne. So, Philip, I want to get your take here. Charles Payne doesn't believe it's only the wealthy who are going to feel the impact of tax increases, despite what's being promised from the White House. What's your take on that?
So, Jen, in short, I agree with him. As a matter of fact, Dave Onset and I have been talking this last week on our morning show about this exact thing. Who pays taxes and what is inflation going to do and what's impacting that? So you and I, Jen, the middle class folks are going to pay the tax no matter what. I mean, corporations and businesses do not pay taxes. They collect taxes for the government and remit them. So I get in this spiff periodically with folks because they think, no, it's just tax the rich people. Well, it's all going to come down to you and me and everybody, whether it's price increases, which we are already seeing. We've talked about on my other radio show in the mornings that corn this week is up 147% from where it was same time a year ago. We talk about wood prices going up. And I know, Philip, you're not talking about taxes. No, but taxes will do the same thing. As corporations and businesses have to pay more in taxes, guess what? Their cost of doing that, the cost to you and I, the consumer, is going to go up. And that's the bottom line.
And again, the clock is ticking on these current tax rates. What can we do now, Philip, to take advantage of those tax efficient strategies before that window of opportunity closes?
Well, Jen, I think that's where now people need to realize that we are in a very, very low tax environment, and they need to take advantage of it. Whether that means you need to sit down with your accountant and do some Roth conversion calculations to see what makes sense for you, whether it means using other investment vehicles that will reduce, the tax implications. And there's several different ways to look at that and different investment vehicles out there that can help with some of the tax issues that are coming down the road. It's just one of those things that we need to know how much taxes are going to cost us. We need to understand that there are going to be days where taxes are going to go up, and that's an issue. And if you don't know how much your taxes are going to go up, and you don't know how much inflation is going to be, that makes it that much more important that you have some kind of income plan in place to help get you through those years. So if you don't have a retirement income plan, please give us a call at 863-285-3815, and let's sit down and work on an income plan for you.
And we spend so much time on this show, Philip, talking about taxes because it is a major risk to your retirement income. It's one of those areas where we tend to hope for the best. And as you're talking about putting together an income plan, Philip, a lot of people tend to be overly optimistic about their future. That's according to the latest research from the Retirement Confidence Survey from the Employee Benefit Research Institute. They say 3/4 of workers expect to continue working to pay in retirement, but only 1 in 3 actually do that. Nearly 7 in 10 workers expect a job to be at least a minor source of income in retirement, but only 23% of retirees actually have that happen. So how do you help retirees get real with their income picture in retirement?
Well, I think that's part of the process of building that retirement income plan. is really intriguing, because I get people all the time that say, well, this is what I spend. And I have to come back and say, well, does that include this? Does that include this?
Mm-hmm.
Does that include this? Oh, no, I forgot that. I forgot that. So we try to go through at least a little bit of a checklist of, hey, here's some common expenses. What are yours in these categories? And so that helps at least get a better picture. Is it perfect? No, but we plan for inflation within our income plan.
And Philip, when we're talking about our income, we have to talk about the risks that can swipe away at the money that we're counting on. Risks like taxes, for example. We've been sounding the alarm that higher taxes are probably coming. Most people don't realize we are in a low tax rate environment, but taxes aren't going to remain on sale forever. And even at their current rates, they can swipe away at your savings, leaving you with a fraction of the money that you were counting on for retirement.
Oh, you're absolutely right, Jen. And you don't want to assume that you won't be impacted by President Biden's proposed tax increases because you're not, quote, wealthy enough to have to pay those. I bet just about everyone listening has a few areas where they can become a little bit more tax efficient with their retirement money. So that's why, for listeners of the show today, I want to help you with a couple things. One, I want to help you understand the potential impact taxes can have on your retirement savings. Second, I want to help you learn about ways to reduce or possibly eliminate taxes in retirement. And then third, we want to help you create an income strategy so that your retirement income lasts as long as you need it to last. Again, this is only for listeners of today's show. And if you saved at least $150,000 for retirement, call 863-285-3815, and we can help you go over your retirement accounts and uncover what your possible tax liabilities are going to be in the future. And we'll talk about some of the strategies that can help you reduce your taxes down the road. It could mean tens of thousands of dollars back in your pocket to spend in the way you want to spend in retirement. There's no cost, no obligation, but this is only for listeners of today's show. Call right now, 863-285-3815. That's 863-285-3815.
This is the Statler Financial Radio Show. We'll be back.
If you have a retirement plan and would like a second opinion, call Statler Financial Services today. 863-285-3815. That's 863-285-3815.
Thanks for joining us today on the Statler Financial Radio Show. I am Jen Rezac, happy to be here alongside Philip Statler. He is president and CEO of Statler Financial Services, talking about taxes here in this part of the show. And so often when we think about taxes, we just think about the chaos that happens during tax season, right? The forms, the deadlines, the scramble to find everything you need. In my house, Philip, it's a big old manila envelope that ends up getting stuffed full of everything. This is just kind of how we handle this.
Poor tax preparer, man.
I know. I try to keep it all in order as best I can, but this isn't what I do for a living. The IRS, they actually send out over 8 billion pages in forms and instructions every year to help people get their taxes filed. It is a lot going on. There's so much to do. And when there's a lot going on, what do we all do? We put it off until the last minute. And that's just not the way to approach this either. But as we talk a little bit about taxes and the fact, Philip, that most of us focus on tax season as when they think about taxes, talk a little bit about the difference between focusing on tax season, getting our taxes done, and tax planning as a concept.
Well, there is a big distinction between the two. And most folks only do the first one, and that's tax preparation. Mostly because we have to, right? We don't have a choice. The government requires us to file a tax return every year. And so that's what everybody focuses on. They want to get that tax return done. They're praying they're going to get a refund. Mm-hmm. And then they move on, and they don't think about it again until next year. when it's time to do the whole thing all over again, get their documents ready,
Right.
go sit down with their preparer and get their taxes done. So that's preparation. Well, tax planning is a whole different ballgame. It's planning for your taxes, right? It's what does my income look like this year? What do my expenses look like this year? What could I do different to help take advantage of my tax situation? I give you an example of one of the things that we look at with our clients is they're not going to make much money that year. All they have is, I have several clients in this boat. I mean, they don't have to take their RMDs yet. They're required minimum distributions. They're living off of Social Security and a little bit of dividend income and doing okay, but they got this huge IRA over there. And so now they're sitting here paying zero taxes, zero, not even using their whole standard deduction. And so it's a great time to start like, hey, let's do some Roth conversions. Let's just take money out and put it in non-qualified accounts. Let's don't waste this opportunity that we have. So that's one situation, Jen, and I see that more often now than I used to see it. But it's because they raised that standard deduction so high, and so that's one area. The other area we look at now is because we're still in a really low tax brackets historically compared to what they were back in the 70s. And so the question is, when do we think tax rates are going to go up? Who knows? Mm-hmm. My fear is that they're going to go up sooner rather than later.
Right.
Every year, folks need to be making this decision in the planning process. Do I do a Roth conversion? What tax bracket am I going to be in this year? Do I have any room to make a Roth conversion? Or should I be putting money into a Roth IRA or a traditional IRA? These sound like simple questions, but they're planning issues. They're things that we need to know what your income is going to look like for that year before we can really make an intelligent answer to those questions. And so that's the planning process. Preparation, hey, it's done, right? I mean, it's historical. We're looking at what happened last year, not what's going to happen this year. So that I hope that helps folks understand kind of the distinction.
And talk a little bit, Philip, about your history with recognizing the need for tax planning, because as someone who has a background in taxes, you saw the lack of planning that was going on year after year, right?
I did. I mean, back, I'm trying to think how long I've not really had an accounting practice of my own. So it's been 20 years now, 25 years. But that's what got me into doing financial planning, investment management, is because when I would sit down with folks, they weren't preparing. And when they would go to the financial advisor, they weren't getting any advice on that side either. So that really got us going, and where we would do a lot of tax planning as well as income planning and other areas of that whole spectrum of planning for retirement when it comes to taxes, because I've been doing taxes for over 30 years. And so it's an area that I understand and know some of the consequences of not planning and helping people plan the right way for the retirement they're going to have. So that's my whole background. When I graduated, I got a degree not only in accounting, but also in finance, because I love the investment side of everything. And so that really catapulted me into this industry back in the mid-90s.
Philip, talk a little bit about, if we want to have some of these conversations with you, getting into some of the opportunities right now for tax planning. How do we reach you, and what does this look like?
So it's easy to get a hold of us. They can give us a call, 863-285-3815. They can even go to our website at statlerfinancial.com. There's a link to my calendar there. They can schedule a financial x-ray. They can schedule a 15-minute phone call, whatever they're more comfortable with to initially get started. I would just say do something to get started. Don't procrastinate any longer when it comes to your retirement and doing the tax planning that needs to be done going forward. So again, that number is 863-285-3815 or my website, statlerfinancial.com.
Talking today with Philip Statler. He is president and CEO of Statler Financial Services. I am Jen Rezac alongside Philip. I think we all pretty much understand how things like income taxes work during our working years. Talk a little bit about how this changes when we get to retirement and we're no longer earning a paycheck. It doesn't mean that income taxes and those types of things go away. It's just taken care of a little bit differently. Talk a little bit about how that changes and the fact that this is the first time that we actually have a little bit more control over things like that.
It is, Jen. And you say that, and I almost start laughing because I can't tell you, I get a couple calls every year. Philip, hey, I retired this year, so I'm thinking that this coming year, I'm not going to have to pay any taxes. That may be true, but more often than not, it's not true. It's a different way, right? Because they're taking money out of their IRAs, or they're taking money from a pension. They're getting Social Security. They think all their Social Security is tax-free money, and that's not the case. It could be, but your Social Security may end up being taxable income if your other income is too high. And it becomes a convoluted discussion, which requires a whiteboard and a computer screen to really make sense of it all. But believe me when I tell you that your Social Security could be taxable anywhere from 0% to 85% of your Social Security could end up being taxable. And that just throws people for a loop because they haven't planned for that. And so that really messes them up because now all of a sudden they've taken a large chunk out of their IRA and now they have to write a big check because a lot of their Social Security becomes taxable. So that's where the planning comes into. I tell my clients, look, if you need money, that's fine. Just tell me what you need so I can figure out the best place for you to take it from a tax standpoint. Let's look at it from a tax standpoint and a financial standpoint. Let's just don't go take it out of one place and cause us to have to pay more in taxes. And so, clients appreciate that because they have various pots of money. And that's one of the things that they need to look at is where should I take it from? And I think it's one thing also, Jen, that really creates some differential between us and other firms out there. I mean, go to one of the major wirehouses or one of the major firms and say, okay, look, I need $20,000. I have a Roth IRA, a traditional IRA, and a non-qualified account. Which account should I take it from? And they're going to say, we can't tell you. That's a problem when you're sitting there trying to determine, I need money. Where do I take it from? That's where I think we add value to our relationship because we understand the inner workings of taxes and how that plays a big role in retirement. And we don't want people to pay more than what they have to. Sometimes it's a necessary evil that we have to do, but we don't want people to pay more than what they have to, Jen.
Right, exactly. But we have to do something about it. It's not going to happen by accident. Talk a little bit about how we can learn about existing opportunities, because that's the other thing we need to realize. As much as we complain about what's going on with taxes right now, they're actually at a pretty low point. I think they're lower than they have been in a number of decades. How do we learn about existing opportunities to save on taxes before those tax laws change again? Probably will at some point under the Biden administration.
Well, that's true, Jen. At this point, right, folks, we have an opportunity till 2025. 2025, the Trump tax changes will expire and we'll go back to where we were before this tax law was passed. That's if, the current administration doesn't come in and change things before that. So every year has question marks. So, but right now we know that we have 2021 that we can work with. And so it's a great opportunity to sit down and see what opportunities are available to you. Should I do a Roth conversion? Should I take my RMD and buy life insurance? What opportunities are out there that could enhance my net worth, could enhance what I give to my beneficiaries or to the charities of my choice? what's going to help put me in a lower tax bracket down the road? Folks, these are all things that we can answer today by starting that process. All you have to do, give us a call at 863-285-3815. That number again is 863-285-3815. Or again, you can go to our website at statlerfinancial.com. There's a lot of these radio shows are there, as well as a link to my calendar. You can schedule a 15-minute phone call. We can have a conversation about things that are important to you. You can schedule a financial x-ray where we can get together and actually analyze your portfolio to determine how much risk you have. So a lot of things available. All you have to do is give us a call at 863-285-3815 to get that process started.
This is the Statler Financial Radio Show. We'll be back.
If you have a retirement plan and would like a second opinion, call Statler Financial Services today. 863-285-3815. That's 863-285-3815.
You toss a penny over your shoulder into a fountain and you make a wish. You look into the fountain and see a lot of pennies, but you see some quarters too. You think, who throws quarters when pennies will do? Now think about the taxes you could be paying in retirement. Do you want to throw pennies or quarters to Uncle Sam? Philip Statler at Statler Financial knows that not planning for taxes in retirement can drain your savings. Taxes can be complicated, so start planning now so you aren't caught off guard in retirement. Call Philip at 863-285-3815. Together, you'll create a plan designed to help you keep as much of your money as possible. Watch your pennies and quarters in retirement. Tell Philip Statler at Statler Financial what your retirement wishes are. Call now, 863-285-3815. That number, 863-285-3815. Our firm offers insurance services and may not give tax advice. Advisory services offered through Statler Financial Services, Inc., a registered investment advisor firm in the state of Florida.
Thanks for joining us today on the Statler Financial Radio Show. I am Jen Rezac, happy to be here alongside Philip Statler. He's president and CEO of Statler Financial Services. He is the inaugural Highlander Award winner for Financial Representative of the Year. Talking today about taxes and the fact that far too often we only think about taxes during tax season, but it's really during the off season that we need to be thinking about all this stuff. I mean, we can make those analogies or those comparisons, Philip, to different sports. My kids aren't going to be going to the Olympics, I don't think, for anything that they do, but my daughters who are runners, they are doing training in the off season. They're running with their team even when it's not cross country season or track season. My boys who play baseball, they go to batting practice when it's not baseball season. So my kids get it. This is how this happens with sports. Why do so many people not take a similar approach when it comes to their finances and things like taxes and think about them in the off season?
Well, I'm going to say probably the number one reason that folks don't do it is they don't think about it, right? They don't think about what they need to be looking at going forward. Mm-hmm. They're more concerned about filing and taking care of that past historical stuff. The second reason that's out there is they have a budgetary issue. They don't want to pay for it, right? It's not free. You have to sit down with a tax professional. You have to lay out what you're trying to accomplish. And you probably got to find a tax professional that has some investment savvy to them to get you through that. Or you need to work with a financial advisor that has the tax experience that they can help you walk through that process. And so that's the reason people miss out is because they don't think about it. They don't want to pay for it. And their current financial advisor can't give them advice on it. So those are the top three reasons it doesn't happen.
Right. But it's so important that we think about it and we don't procrastinate here. Talk a little bit about, Philip, as we talk about being proactive when it comes to tax planning, thinking about these things in the off season, what all goes into creating a tax efficient strategy for your retirement?
Well, a lot of things. I mean, because typically when people retire, the majority of their money is going to be in a 401k. Maybe a profit sharing plan, but typically it's going to be 401k money or other IRAs that they've had 401ks rolled into over the years. And so that's a tax explosion fixing to happen. And so, we need to find ways before folks, ideally before people retire, if not, at least those first couple years after they retire, find ways that we can take that IRA and make it less intrusive from a tax standpoint. Whether that's, hey, I need to start taking some money out of it and just put it in a non-qualified account, which then we have to pay tax on the dividends and the capital gains, but that may be okay. Or do I start doing Roth conversions? I mean, there's a lot of different things we need to step through, and everything's going to be different depending upon your circumstances. What tax bracket you're in, how much you have in these accounts, what your other income looks like outside of what's in your IRA. There are so many components to making the right calculations to determine what is that going to look like for you. Not to mention, you throw in the Affordable Care Act, and that can just totally throw off all your calculations. So it's not something that's cut and dry, easy to look at and say, okay, this is what I can do. Because a lot of folks are retiring and they're not 65 yet. So that means they're not on Medicare. So that means a lot of them, if they don't have company provided health insurance, they have affordable care insurance, which means they're getting these credits. That's income based. So that all figures into what can I do? Because a Roth conversion or taking money out of that IRA, that's going to jack up our income, Jen, and that can cause some people some big headaches that they don't anticipate.
Right. And it's just one of those things. It's important for us to understand that we need to be tax efficient because taxes can eat away at what we've worked so hard to save. It can leave us with a fraction of what we were counting on. And this is not just pocket change slipping through the cracks. Just talk a little bit about the impact on your lifestyle later on in retirement if you don't do something about taxes down the road.
Yeah, that's right. I mean, one of the things that always gets me, I'm part of Ed Slott's Master Elite IRA program. We get together a couple times a year just to get updated on tax laws and IRA rules and that kind of stuff. But one of the things he always says, Jen, is that, you have an IRA, but it's not all yours.
Right.
You share ownership. There's a mortgage on your IRA. And it comes due every time you take money out of your IRA. Uncle Sam's sitting there with his hands out. He wants his part. And if you think about it, it only takes one mistake. Hey, I'm going to buy a car. I'm going to take that money out of my IRA. Now you've got this huge tax bill that you weren't counting on because you didn't think through the whole process of what that means. That's why I think it's so important that folks look to see where are they taking money from? And let's be tax efficient with our distributions, because what could we do? Well, you could do a Roth conversion. Now, folks, listen, a Roth conversion is not free from taxes. The idea of the Roth conversion is you're paying tax at the low rates we see today so that we don't have to pay tax at the high rates that we think we're going to see in the next 5 to 10 years. So there is a tax consequence when you do that Roth conversion. Or if you do what they call an investment quality life insurance policy, where we invest in a life insurance policy to give somebody a tax-free death benefit down the road. That's the way a lot of folks will enhance their net worth to give tax-free benefits to their children down the road. And there's a lot of things out there. But which one's going to work for you, and how do you plan for the tax liability that's going to come along with it? Do you have some losses that can help offset it? Do you have additional withholding taken out of one of your pensions or your paycheck? Because now we could have higher taxes on our Social Security benefits. And then something that most people don't even realize can happen to you, Jen, is your Medicare premiums can go up if your income is too high.
Wow.
And people get blown away because I'll get a phone call. Why did my Medicare premiums go up? Well, you remember that big chunk you took out of your IRA because you wanted to buy a new house. You didn't think much of it. You went ahead and paid the tax. Well, that's all income. And so now your Medicare premium doubled, or it could have tripled, depending upon how high your income is. So that can be really, hit you from behind and not realize that added expense just because you took some money from the wrong place or didn't think through the whole process properly.
It's just one of those things where it does help to get a little guidance. It is hard for all of us to think through all of those steps and understand the tax consequences of every decision that we make, because these things, there's kind of a domino effect here, or there could be, Philip, when we're thinking about the money that we need for retirement, where we're getting it from, how all of this can have an impact on our taxes down the road. It just pays to get a little bit of help on this so we don't make a costly mistake with our life savings, right?
That's right. I mean, a lot of times it's structure. How do we structure what we want to do? And so I can't tell you, I do this several times throughout the year. I'll have a client call and say, hey, look, I need this. I'm going to buy a new car. That's a good example. Or I'm going to buy a house in the mountains, right? So I want to take money out and do that. Sometimes, folks, it's better to be not debt-free because of the tax consequences. So can we pay for that car in 2 years instead of 5 years, right? And so we're not going to pay a whole lot of interest, but by breaking up that tax payment over 2 years, now it lowers our tax liability, maybe even puts us in a whole different tax bracket. Same thing with the house. I've done this with several clients. We've had this issue. And so it's structure. It's knowing how to structure things so that they're tax efficient. And that's really and truly the key. There's just not a lot of folks out there that will help you through that process the way we will here at Statler Financial, is walking you through and making sure that what you do is as tax efficient as it can be. And I understand there's times that, hey, we got to do what we got to do, and it's going to cost us some tax dollars. But I'm going to be your sounding board. I'm going to be that person that says, here's other ways you could do what you're trying to do that could possibly lower your tax burden in the process. Let's take the time to research and investigate what's the best way for you to accomplish what you're trying to accomplish from a tax standpoint and from a financial standpoint. The two things are intertwined so much that you can't think of one without thinking of the other. And that's where people really and truly end up with an issue. They think, I need this money out of my 401k for this, and they don't even think about the tax consequences that come along with it. Folks, that's where we come in. We'd love to help walk you through that whole process of what that looks like for you, because there's several things that can rob you in retirement. Taxes is one of them. Inflation's another one. And risk in your portfolio is a third one. The stock market can evaporate your retirement income if not planned for properly. So give us a call, 863-285-3815. That number again is 863-285-3815. Let me help you put together a tax efficient plan. Be here for you when you have those questions that need the research, need the strategies, need the structures in place so that you can accomplish what you want to accomplish as tax efficiently as possible. Give me a call, 863-285-3815.
This is the Statler Financial Radio Show. We'll be back in just a moment. Stay with us.
Call Philip Statler today to get started on your complimentary financial x-ray report. 863-285-3815. That's 863-285-3815.
From the pitch, swung at a little too soon.
Strike three, you're out.
To the joke told at the wrong time. To barely missing your connecting flight.
This is the final boarding call for Flight 109 to Chicago.
Timing is everything. The same is true for your Social Security benefits. Take them too soon and you could leave a lot of money on the table. Take them too late and you might spend down too much of your savings. Everybody's situation can be different, but taking your Social Security benefits at the right time is important for your retirement success. Philip Statler at Statler Financial understands Social Security and can help you make decisions that are best for you and your retirement dreams. Call 863-285-3815 to start optimizing your benefits. With Social Security, timing is everything, so don't delay. Call Philip Statler at Statler Financial today. 863-285-3815. That's 863-285-3815. Our firm offers insurance services and is not affiliated with the U.S. government. Advisory services offered through Statler Financial Services, Inc., a registered investment advisory firm in the state of Florida.
Thanks for joining us today. This is the Statler Financial Radio Show. I am Jen Rezac, happy to be here alongside Philip Statler. He's president and CEO of Statler Financial Services. And Philip, you know there are things you're not supposed to bring up at a dinner party, and I don't know if Joyce has to remind you things. There are times when Jeff and I are going somewhere, and I'm like, please don't. Here's a couple things to please not bring up when we get there. And there are a couple topics that are just uncomfortable. You don't even want to talk about them with your kids or your financial professional or your spouse. But these are things that are important to think about as you get close to retirement. So, Philip, we're just going to have to bite the bullet. We're going to dig into our top 5 for this week. It comes from Forbes. 5 most taboo topics in retirement. So are you ready for this, Philip?
I think I am. I'm assuming these are things nobody wants to talk about. Nobody wants to think they even exist, right?
Right. We just want to ignore it, but we have to talk about them. So here we go. Number 5, because we go backwards. We go from 5 down to number 1 on our top 5. Number 5 on our list is your mental health in retirement. Tell me a little bit about what you've seen with people struggling, Philip, with maybe a loss of identity or isolation after they leave their careers behind, because we identify who we are by our job. It's really hard, isn't it?
We do. That's so true. And so I think that's one of the things that you're right. Nobody wants to talk about that. Where I've seen people that have retired and, within a year, they're in a funk. They just don't really know what to do, or they're unhappy. They think that, okay, I'm going to go back to work. And a lot of them they'll just start to go back to work. But I think back to my uncle. My uncle, he worked, I think he was like 70 or 72 before he finally retired.
Yeah.
This is very true. I see it. I've seen it with some of my uncles. I've seen it with some of my clients. They feel like when they retire, or if they quit working, they're going to die.
Mm-hmm. Gosh.
And I think that weighs on them to keep doing something. And so, and we have this conversation with people with our clients that haven't retired yet, they're starting to work on that. And my question to them is always, okay, so what is your plan to occupy your time when you retire? Because that does become the problem, right? Is now you don't have to get up at 5 o'clock to be at work by 7 or 7:30. So you have no schedule, and that all plays into depression, mental health, that whole thing. And so it's an area that people need to be proactively working against. And the way to do that is not just have a financial plan, but have a time plan. What are you going to do when you retire?
Philip, let's talk about the next one on our list. We are working our way backwards. So number 4 on our list of taboo topics in retirement is divorce. Over the past 30 years, the divorce rate after age 50 has doubled in the U.S., and this is something that causes emotional and financial upheaval at any time in your life. But talk about the challenges if this happens as you get close to retirement and all of the financial things going on at that time of your life. Well,
it is difficult no matter when you have a divorce. It's difficult in the family. It's difficult in the people involved. But especially heading into retirement or slightly after retirement, because you are a team. And that team, especially if you put together any kind of retirement plan or income plan, it's based on the incomes that are there, and it's based on the two people that are married. And so if we have a divorce, then now we've got to split assets. One spouse, if they're relying just on Social Security, is probably going to have a lot less. So it just is a major upheaval. And then so the other part of that is that there's some things out there that a lot of times people don't think about when it comes to, well, the husband has, or let's just say one spouse has all the retirement assets in their name, right? They worked, all the IRAs or 401ks are theirs, and you can't split them. A lot of times people think, well, I can't split them without tax consequences, or they don't realize there is a tax consequence if you do split them. So I'll just throw this out there so that people know that there are ways around the taxability of splitting retirement accounts. And it's called a QDRO, which stands for Qualified Domestic Relations Order. And it's a QDRO. And I would say divorce attorneys should be up on this process and availability, and the process now of speaking with somebody that is one of the things that they're looking at. Is they're going to need to they're going through a divorce, they're going to have a QDRO, and they're going to have to create some income from that. So it's tough no matter when you do it. In retirement, it's just like been together for so long, and now it's a huge change and a huge obstacle to overcome.
Certainly, some tough things to think about here. Talking today with Philip Statler. He is president and CEO of Statler Financial Services, going through our top 5 list of taboo topics in retirement. 863-285-3815 is the number to call to reach Philip and the team at Statler Financial Services if you're looking for a little guidance on some of these tough areas of retirement. That's 863-285-3815. Number 3 on the list is religion, and I'll give a quick example of how this might come into play. We won't spend a lot of time on this one, Philip, but it might not make financial sense for someone to tithe, but it's important for them to give something to their church. How do you handle making financial recommendations while also respecting someone's religious beliefs?
Well, Jen, religion, when it comes to their money, it is one of those fine lines you have to walk. I mean, I know, we've always believed in tithing and that type of thing for our church. And so I get it. Here's where I've had to have some tough discussions with clients, because they're working and all of a sudden they retire, and in retirement, our income declines. And so they want to keep giving at the same level they were when they were working. And that can have a damaging impact to their income plan down the road. Now, it's great for the church or the organization, but it can be detrimental to the retiree. So because here's what they don't realize. Yep, Social Security, that's income. Their pension, if they have a pension, that's income. But that other leg that they're drawing money from, that may or may not actually be income. It could just be savings, right? And so it's kind of like already tax money. It's already tithes money. So, sometimes it's hard to get people to see that and realize that because of the emotional tie there. And so it's something we have to walk carefully through, but as the financial coach, retirement coach, and the fiduciary person in the relationship, I've got to ask the hard questions and walk people through the answer and the impact that's going to bring to them.
Going down to number 2 on our list of taboo topics. Again, it won't spend a lot of time on this because we just have a few minutes left. But number 2 on the list is relationships. Retirement has an impact on your relationship with your spouse, your kids, your grandkids. How important is it to talk about some of this stuff, Philip? Setting boundaries when it comes to the time you're going to spend watching the grandkids, or how much time you're going to spend with your spouse when you're both home all the time.
That's true. And it's got to be more than conversation. You got to take action, right? So you're right. So if if your family all lives in the same town, then all of a sudden you've retired and now, the grandkids are left at your doorstep all the time for you to take care of and watch. And so your kids can go do whatever. And for a while, right, we love it, right? So, hey, they're our grandkids. We're spending a lot of time with them. And so I get it, but you got to set up some boundaries for what that's going to look like for our kids and grandkids. The other part, though, is our spouse. We've been working up until retirement, so we're each away from each other for at least 8-10 hours a day. Mm-hmm. And so now we're retired. And now we're spending, a lot more time under the same roof. And that can be challenging. That's why we go back to two before this, divorce, right? So this can be a reason that one pops up at this point in the relationship, is because now we have no diversion. We're together. And so that becomes the problem. And so we need to have our time. I tell people, not only do we need an income plan, we need a time plan.
Yeah.
and that's part of what needs to happen there in retirement.
That's right. Working our way through the top taboo topics from Forbes magazine, and number 1 on the list is money. And Philip, this is ironic because we talk about it all the time here on this show, but talk about why some people see money as a taboo topic for retirement, and how do you help people get answers when they worry that they're just being nosy, or maybe they're asking the wrong questions when it comes to money in retirement?
Well, think about it this way. Husband and wife. Do they really have that conversation of, do we have enough to retire? Or is it just something we do, right? We're 62, I'm retiring. I'm 67, I'm retiring. Or do we have that discussion? And so nobody wants, or I won't say nobody, a lot of folks don't want to have that discussion of do I have enough, because they're afraid of the answer. And so I think that's a question that more people need to have sooner rather than later. Hey folks, if these top 5 taboos are on your list of things, or if we can help in any other way, that's what we're here for. We are an independent sounding board for you to help you prepare for retirement. Give me a call at 863-285-3815. That's 863-285-3815. Give us a call today and let's get started on your retirement.
You've been listening to the Statler Financial Radio Show. Remember that number, 863-285-3815. That's all the time we have for this week, but we'll talk to you next time.
Information provided during the Statler Financial Radio Show is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal, or tax professional before taking any action. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Individuals should thoroughly review the contract for specific details of the product features and costs. Income payments and withdrawals from deferred annuities are generally taxable as ordinary income in the year they are taken. All investing involves risk, including the potential loss of principal. No strategy is guaranteed to be successful.
This radio show is a paid placement.